This conference will now be recorded.
Okay, so we're looking at financial review problem 1. And in this problem, you had beginning balances. Notes payable was in here twice, so you simply combine those, and retained earnings question mark. So you have to solve for retained earnings using the accounting equation. So let's see if we can do that first. And the way we're going to do that is we're going to put a debit by an account that's going to have a debit balance, and we're going to put a see if it's going to have a credit balance, and then those differences is going to give us the retained earnings. Ooh, just clicking. So accounts payable has what kind of a balance? Should have a credit balance. Account receivable,
Debit.
debit. Inventory,
Debit.
equipment,
Debit.
notes payable,
Credit.
cash,
Debit.
accumulated depreciation,
Credit.
credit. That's correct. Notes payable again would be credit. Common stock,
Credit.
so if we add up the debits, we add up the credits and take the difference, what is our beginning retained earnings?
$160,000.
Okay, so Mr. Jenkins says that's 160,000. 160,000 what, Mr. Jenkins?
You say what?
Having a credit.
It's negative, so credit.
Oh, that's bad guess.
Well, debit.
So normally we would want retained earnings to have a balance. That means the company is doing well. But if it has a debit balance, then they haven't been doing so well. So what's the next thing we're gonna do, Mr. Jenkins?
Post debt to the ledger. To the T charts.
So we're gonna put these balances into the T account. So that's the first thing we're gonna do. So we go to our T accounts. We will put those balances in. Okay, so here we have the T accounts. And these beginning balances should have been in a different color. So for cash, that beginning balance, let's just see if we can get it to go to yellow. Can you all see that? I can't see it anymore. Okay, undo.
No, it's really small on the screen.
Okay, now you can adjust your camera, and let me see if I can make these larger. This better? So can you see these better now?
Yes.
Okay. So if we put the new balances in, the first number in these accounts, this 100,000 was, the first number you see is the beginning balance. So cash 100, receivables 300, inventory 500, supplies 8,000, equipment 400,000, common stock 200,000, retained earnings, that debit of 160, accounts payable credit of 200, notes payable 300 and 600, so both of those, then accumulate depreciation 160. And so the first thing we would do would be to put those balances in. So any question about the first number you see, those numbers simply come from the beginning balances. Any questions? Okay, so let's see if we can make journal entries. But I'm gonna go back. Okay, so we just put all of these numbers in. Then let's look at these journal entries. We repurchased from shareholders 50,000 shares of previously issued stock. So we buy our stock back with debiting treasury stock. We purchased 8,000 supplies, 5,000 shoes at 125, sales 6,000 at 200, purchased 5,000 at 150, sales on account 4,000 at 200. Journalize the adjusting entry for the second year depreciation. We'll look at that. Ending supplies 2,000. We need to make an adjusting entry for that. Paid dividends 200,000 in dividends. Collections on sales of account 500,000. Payment on accounts payable. Payment on notes payable. Paid salary expense. And at the end of the year, they sold some equipment costing $100,000 for $30,000. Doesn't want me to copy those, so I'll just have to at times go back and forth. But let's now begin to make these journal entries. So what's going to be the amount for this first journal entry? So y'all should be making these journal entries anyway. So what's this journal entry going to be? Hopefully you got your journal sheets out, or you got your worksheets out. Make the journal entry for me. What's the journal entry going to be?
You asking for the amount or the type?
Well, the type is what? Not so much the type, just make the journal entry. So on this journal entry, we repurchase stock from shareholders. So what are we going to debit?
50,000.
We're going to debit what? Treasury stock. And what are we going to credit?
50,000.
Well, I was putting the accounts down. So we would debit treasury stock for 50,000, and we're going to credit cash for 50,000. Any questions on that journal entry? Okay, let's go down next journal entry. So we'll just put them on this sheet here. What we're going to debit in this journal entry? We purchase supplies.
Supplies.
I'm supposed to underline everything. So how we debit supplies for 8,000. What are we crediting?
Accounts payable.
Any question on these first two journal entries? What happens in our next journal entry?
Accounts receivable. We're gonna debit 500,000.
We purchased.
No, that's inventory, right? That's the inventory and accounts payable.
Oh yeah, that's the oh yeah. I'm looking at the wrong one.
So we would debit inventory. How much we debiting inventory for? It was 5,000 times 125.
$625,000. 2,500. I'm sorry.
How did you do the math again? What did you say, Professor?
What?
How did you do the math again? What did you say to get the amount, the total?
1,000 times 125. You bought 5,000 things at $125 each. Got it?
Yes, sir.
Okay. And then we're going to do what?
Accounts payable.
And how much are we going to credit it for?
625,000.
Okay. Any question on that entry?
Yeah, I got a question. So, each time it's gonna be the same number for both. Like on all of these, it was treasury stock 50,000, cash 50,000, supplies 8,000.
Sometimes they may different if you have more than one account, as we'll see. But at the end of the day, the debits have to equal the credits on each journal entry. Okay? So we have 3 accounts. We would need debits of 50,000 credit for 50,000. I mean, let's see. Up a little bit. Okay. Now, when we sell something, we have cash sales now. What do we know is going to happen?
That we gonna end up getting the cost of goods sold.
We're going to have two entries.
Mm-hmm.
In the first entry, we're going to debit cash.
$1,200,000.
I'll take your word for it. 1,200,000. And we're going to
Sales revenue.
credit sales. And that's going to be a credit of how much?
1,200,000.
Any questions? Any questions? What else do we need to do?
You need to go to the inventory chart.
Oh, okay. So you ready to go to the inventory chart, Miss Beautiful?
Yeah,
Okay, so let's see if we can go to an inventory chart.
that's how you get the rest of the journal entry.
Right. That's
Well,
how.
you gotta get the cost of goods in the shoe inventory, right?
Yeah, but that's how you get that when you go to the inventory chart.
Oh, okay. Yeah.
Remember, like in the middle, it's gonna be the middle number.
Mm-hmm. You gotta add those. Mm-hmm.
Mm-hmm.
It's 625,000 though.
How you know it's 625,000?
Because I did it.
Tell me what you did then.
Okay, I got you. Hold on. Where is it?
Okay, you're supposed to be an A student on inventory.
Okay, so when the sales,
But before the
you
sale,
just
let's look
okay.
at
So okay, when you with the beginning when you had the 500 with the 5,000 shoes for the 100, and that was 500,000. So when you bought the other 5,000 for the 125, that was 625,000. And so we were supposed to sell 6,000
Okay, but let's look at where we
shoes.
are. We got
I know,
5 out of
yeah,
1.
you got the 5,000 for the 100 for the 500,000, and then we took 1,000 from the 5,000 for the 125, and that was for 125,000. So we added the cost of the goods sold, those two in the middle, and that's how I got the 625,000.
You got to get our weighted average. So when you do weighted average, you don't use beginning inventory. You don't use ending. You get an average.
Yeah, I think that's where I messed up because I didn't even see where it says the weighted. I didn't even see it says weighted. I had did the FIFO. So yeah, you're right. Don't even listen to me. I'm wrong. I didn't do the weighted average. I did the FIFO.
Okay, so this should be what? 10,000 here. Why didn't we add these numbers, Mr. Jenkins?
You said Jenkins?
Yeah.
Oh, cause we're doing weighted average. So
Why?
when you add them together, then you're gonna add the total together, then you're gonna divide, that's gonna give you your cost for the 6,000.
That's not reflected on here. That was my question. Why is that not reflected on here?
On what? Now it's on there. That's what it say. That's what they hear.
I just changed it. So you add the quantities, then you're gonna add the dollar amount. So this shouldn't be 625. What should it be? Wait a minute. Okay, well, I kind of see what you're doing. Okay, we don't have to bring it down again. And so this is supposed to be, let me put 125 here. This is supposed to be 625. So what we're supposed to be doing, Mr. Jenkins,
You add 500,000 plus 625,000. Then you're gonna get, I think, 1,125,000 and divide that by 10,000.
why you didn't have this on the sheet?
That's mine?
Yeah,
Oh. I ain't even hearing it.
so we're doing weighted average. We don't use beginning or the end. We add the quantities, we add the cost, and we divide 10 into 1, we get what? This is where we get.
You get 112.
Mm-hmm.
112.5.
Right. You weren't
See,
reflecting.
that's where I messed up at, right there.
So why are you gonna mess up here?
I don't know, I forgot.
I think some of y'all had too long a vacation.
Maybe so.
I sure did.
Okay, so notice that in this purchase column, it says the journal entries, debit inventory, credit accounts payable, which we did for the second purchase. The first one was already here. Now on the sale, where we're going to debit cost goods sold and inventory, this chart is giving us the number we're going to use. So we multiply the quantity sold, 6,000 times 112.5, we get 675. So this is what goes into the second journal entry on the sale. So let's see if we can get back here to where we were. So whenever we have a sale, it's always two journal entries we're making. The first journal entry records the sale. The second journal entry, what are we on debit? We're going to debit cost of goods sold. And we're going to credit. What we're going to credit? What we're going to credit?
Inventory.
Going to credit inventory. So when you sell an item, when we buy the item, we debit it, we put it in inventory, but we're most happy when we sell it, and so we're going to credit inventory. And for the same amount. So when you're making journal entries, you have both a debit and a credit. And in having that debit and credit, they must be equal. The debits and credit have to be equal. And of course, we've got to post these amounts. Any questions on these first 4 journal entries? All right, time for y'all to do some work now. Make this journal entry. I mean, y'all can lose a lot of, y'all losing a lot of points today anyway, 15. I didn't turn the stuff in. Can we purchase some inventory?
Yes.
So what we're gonna debit?
Inventory, then we gonna credit accounts payable.
How much we debited for this time?
750,000.
Credit accounts payable. Then what happens next? We're gonna sell 4,000 pairs of shoes at $200 each. So what we're gonna do here?
You gonna debit cash and credit sales for 800,000.
Says sales on account. So what we're gonna
Oh,
do?
wait.
What kind of transaction is this? Type 15, right? So how much we getting? 4,000 times 200? Can you multiply that? Is that 800,000?
Yes, it is.
And we're gonna credit what? Sales again. Sell on account, we debit account receivable will be paid later. For cash sale, we debit cash. So we're crediting sales each time. Okay, but we need another entry. What other entry do we need?
The cost of goods
The cost of goods sold.
and inventory.
We need an inventory for the sale. So every time we have a sale, we have 2 entries. When we purchase the item, 1 entry. When we sell it, 2 entries. So how are we going to calculate what goes in this amount?
Go to the inventory chart.
So what's on your inventory chart?
Mine is wrong. So we're not gonna do what's on my inventory chart.
Okay, so let's. Okay, so we're going back to the inventory chart. And we're bringing down the 4,000 at 112,450. That's because we had 1,250,000. We sold 675. This is what we had left. Then we made a new purchase of 5,000. at 150, so it was 750,000. So we bring the 5,000 at 150, 750 here. We got 133.33 here. How did we get that? Okay, we're going to calculate a new weighted average. So we come here and we add these numbers together and we get what? 9,000, right? Then we add these two numbers together, and how much do we get? 1,200,000. I tell you what you do, Buford. You forget about the zeros. See if your phone will handle your calculator. Then you just put the zeros in. Got it?
Got it.
Okay. So we're going to use either one of these. But we're going to get the weighted average, we're going to divide 9,000 into 1,200,000. And when we do that, how much do we get? What's 1,200,000 divided by 9,000? Or divide 9 into 1,200, Buford.
You said divide 9 into 1,200?
Yeah, you get the same thing. Clifton, you don't have that calculated yet? You still there? So all we're saying is that if you got these zeros, they're going to cancel out. So you can divide 9 into 1,200. And how much you're going to get as the average cost?
When I divided 9 divided by 1,200, I got 0.0075.
Put 1,200 on top and put 9 in the bottom. Put 1,200 divided by 9.
And then I got 133.33.
Okay, that's what we're looking for.
Okay.
133.33. So that's our weighted average. You know, that's what we're going to be using. Whenever we're using weighted average, we don't use the old cost. We have to come up with a new cost. So we sold 4,000 at 133.33. So the cost of goods sold is 533,320. We see that? We just multiply 4,000 times 133, 533,320. Any questions? Okay, let's see if we can calculate some double declining balance depreciation. In double declining balance depreciation, we're going to come up with a rate, and 200% is always going to be the numerator in terms of coming up with that rate, or what we're gonna utilize to calculate it. Our life was how many? 5 years. So to come up with our depreciable rate, we simply divide 200% by 5. And so our depreciable rate that we'll be using is going to be how much? What's our depreciable rate going to be? And, divide 200% by 5. Can you divide 20 by 5? What's 20 divided by 5?
It's 4.
Add a 0, so it's 40%. So this is the depreciation that that's the rate we're going to be using. We're going to ignore salvage since we're using double declining balance. So we don't have to worry about salvage. But how much did this equipment originally cost us up here? It was $400,000, correct? So the cost of this equipment was $400,000.
Where did you get that 200% again?
That's a given. Whenever we're doing double declining balance, it's standard that you're going to use 200%. We always use it. Whatever the life, if the life was 5-10 years, the rate will be 20%. This always stays the same. Okay.
Okay, thank you.
Welcome. I'll make it even larger. So that always stays the same. Now we got to calculate year 1 depreciation. So what would our depreciation in year 1 have been? We're in year 2 now. So for year 1, we simply would have multiplied 40% times the cost, and we would have gotten how much? 160,000. Which, if you look
So
at
we got that because, how did you get that? Go back. Sorry.
it's already in the account.
160,000. Oh, okay.
We simply multiplied 40% times the cost. That's what we use each year.
Okay.
So for year 2, will we do 40% of 160,000?
Well, you're kind of thinking there. That's kind of what we're going to do. We're going to get a net book value now. I'm just going to put NBV, net book value. The net book value is cost minus that depreciation in the first year. So we subtract, see, we've taken 160,000 worth of depreciation. So we only got left to depreciate 40 minus 160, and that's going to give us what? 240. So the cost / net book value initially was 400. We took 40% in year one, 160. We got 240. So now we're in year two. Remember, this is the second year. So how are we gonna get year two depreciation?
So now is it 40% of 240,000?
Correct. 40% of 240. So what's 40% of 240?
Is it 96,000?
I'll take your word for it. So therefore, what's our journal entry going to be then? So what's the journal entry going to be? Going to debit depreciation expense for 96,000. And what are we going to credit?
Accumulated?
Accumulated depreciation for 96,000. Any questions?
What does ACCM stand for?
Accumulated depreciation. I just abbreviated it. Accumulated depreciation. Okay. Ending supplies, $2,000. Make the adjusting entry. What's an adjusting entry? If we go back up here, excuse me, we purchased supplies of $8,000. We get to the end of the year, we only got $2,000 in supplies. So what does that tell us?
Only less than 6,000?
Say what?
It would be 6,000, correct?
So we would have utilized 6,000 of depreciation. So we're gonna debit supplies,
Supplies, expense,
expense,
and then we'll credit supplies.
credit supplies. So the amount of the entry is the difference between the difference between what we bought and what's left. So I'm going to debit supplies, and we're going to credit. Debit supplies, expense, credit supplies. Okay. Shouldn't need any help for this one. Hey, dividends of 20,000. Debit dividends.
Credit cash.
Collections on sales on account. What we're going to do here.
Is that accounts receivable? And then you credit sales? No, that's transaction 3. Collections, right? Or no? This one I used to always get confused on, transaction 3 and 15.
Well, this would have been the 15. You can't have a 3 unless you had a 15.
So
we
that
did
one is accounts receivable.
say what?
So that one is accounts receivable in sales, right?
No.
No? What is it then?
You know what y'all might need to do is to make copies of those journal entry types and have them available. Make you a hard copy, have it available. It can tell you what you're supposed to be debiting and crediting. So on a type 3, we always debiting what? 1 through 6. Cash, right?
Yes.
So debit cash 500,000. What are we gonna credit? Well, we're gonna credit. Is there a C student in the house today?
Do we credit accounts payable or
No.
accounts receivable? I mean accounts receivable?
Accounts receivable.
I gotta get my chart.
They gonna get this guy.
One second.
See, you should have had that chart when you were doing your homework last night. Then we have the number 11.
Accounts payable.
Okay, so we're gonna debit accounts payable because we're paying on it. We're gonna credit what?
Cash.
Credit cash. Okay, payment on notes payable.
Debit notes payable. I think, shoot, I was confused on this
Yeah.
one.
I think you debit notes payable $20,000 and then you debit interest expense of $50,000 and then credit cash of $70,000. Is that right?
Sounds good to me. So we're gonna debit note payable for the 50,000 principal. We're gonna debit interest expense for the 20,000. I mean, when you pay your credit cards now, do they want just principal? Or do they want principal and interest? So then we're gonna credit what? Cash. 70,000. Any questions? So here we had 3 accounts, but the debits still equal the credits. The debits still equal the credits. Pay salary expense. That should be an easy one.
Salary expense, you debit that, and then you credit cash.
Okay, so debit salary expense. And what about this last one?
I didn't do that one.
Why?
I was confused.
So let's look at what we're going to do here. We sold some equipment, and it says we got cash of 30,000, right? So we know right away we got cash of 30,000. Okay. We sold equipment. The equipment had a cost of 100,000, right? Tab over. Wait. Now, on equipment, it costs 100,000. So we know we have what? Some accumulated depreciation on this. How much accumulated depreciation do we have?
So is it saying that it started at 100,000 and now it's going for 30,000?
What you got for it?
I didn't do it because I was confused.
Okay, we need to determine how much depreciation that we have on the 100,000. So if we had,
Will we just put $70,000 or no?
we're at cost, $100,000. Then we know that in year one, we would have calculated depreciation of how much? We would have taken 100, we would have taken in year one, we would have taken 40%, and so the depreciation would have been 40,000 on this 100.
And did we get 40% because that's what we did with the previous entry?
Yeah.
Okay.
Then in year two, we would have had depreciation of 40% of 60,000 because we had 100, took 40, so that left 60. Then we're gonna take 40% of 60, and that's gonna give us what, 24,000? So total depreciation on 100,000 would be
Professor,
64,000.
where are you getting these numbers from?
The 40% from the previous journal entry, we did the depreciation.
40%. The first year on this 100,000, we would have taken 40% of 140,000. That left 60,000. So we take 40% of the 60, we get 24. So the accumulated depreciation would have been 64,000.
Oh, okay, okay.
Is that like
No, yeah, I still don't.
how you usually do it? Like, is the depreciation always going to be 40% for each year?
DDB, yeah, the rate's gonna be 40% if you got a 5-year life. If it was a 10-year life, it'd be 20%.
Oh, okay. Okay.
But it's 40% of the remaining balance. We're at 100. Maybe I need to put an underline here. So that net book value was 60,000. So then we take 40% of the 60, we got 24. So 40% of 100, 40. Then 40% of 60 is 24. So we're writing off a lot in the first years. This is a straight line to be an equal amount each year. So we go back to our journal entry. We put the depreciation in. We put the cash in. The equipment is 100, but we're not balanced. So what are we going to do? Got to balance it out. So we got a loss on this equipment. And how much is this loss going to be?
Is it 34,000? No,
It's
I'm
going to
sure.
be the amount of money that makes this balance.
6. That'd be 6, right? But
Yeah,
94. Taking 100, it'd be 6,000.
So 30, 64, and 6 equals 100. So someone asks, okay, do they always have to equal? Yeah, the debits have to equal the credits. So we have all of the journal entries made. Now what we're going to do next? Y'all make me do all the journal entries for you.
I gotta go to the T account.
You got to put all these amounts in the T account. Put beginning balances in, then all of these amounts.
Professor Boyd, can I do mine over?
Can you do it over?
Mm-hmm.
Did you do it?
Yeah, I submitted it, but it's not right. But since I have the right journal entries, can I do it over? Or can I do the second one with the other students?
No, you can't do that.
Okay, can I do this one over?
Do it extra. You know,
I just want to make sure mine is correct. And mine wasn't correct this time before you went over it.
so these are the journal entries. the T accounts. Somebody put some things in here from somewhere. You come up with your balances, and then once you do your balances, you got to come up with what comes next.
Your trial balance.
Trial balance. And it's supposed to balance. I don't know if all of this is right or not. Then after we do the trial balance, what are we going to do?
The income statement.
Mm-hmm.
And after your income statement, you do the statement of retained earnings and your balance sheets.
But you have to do it.
Yeah.
You don't copy somebody else's stuff. Or get somebody to send you that worksheet and you do it. Isn't that right?
Correct.
So Jenkins, we're gonna do our own worksheets from now on.
I did my own worksheet.
You did. You couldn't tell me nothing on it.
Who
All
can
right.
tell you everything? I just stopped talking.
So you just stopped talking. So you made that last journal entry.
Yeah, you talking about when you owe when you lose 6,000?
Yeah, you made that journal entry.
Yeah.
Okay.
I ain't gonna lie to you. I did I went on YouTube for that one.
What YouTube?
Huh?
What YouTube?
Yours.
Okay. All right.
Hey, you, Professor, you got a YouTube channel?
Yes.
That's so bad. Definitely gonna subscribe.
Okay. So I guess we have a few people who are new. So for everyone who's new, you need to get into a team. You have a team assignment due next Monday. I'll tell you about it on Friday. It's not a major assignment, but it's a simple.
Hi, Professor Boyd. I'm Alicia Barlow. This is my first day in class. So do you know what team I'm on? What team I'm in?
Miss LaKenya Buford is our team manager.
Okay.
Oh, I'll add you. Can somebody add her to the group me, and then I'll get everybody in groups that wasn't present
Already
last class.
added her to the group me.
Okay.
Do you need my number?
So we had 2 teams formed last time. She's going to tell you how to do that. So this in all sessions, as long as I remember,